Hello friends and welcome to my YouTube channel Simply Stocks, and today I'm going to talk about Dmart, one of the marquee stocks since its IPO, and over the last 2.5 years it has given more than 6x return for the investors. So let's understand whether the stock is expensive or not and whether you should buy the stock or not. Let's get started and at what level you should buy. First of all, a disclaimer that this is not a stock recommendation. People taking any position into any share that I talk about should do that with their own due diligence and research, and I'm not in favor or against any company that I talk about. Now about DMart, the company was formally established in 2000, and they focus on providing consumer products, and they are into the retail space. So they have retail outlets and big retail malls, as you would consider, in which they sell consumer products which are also durables as well as food items. They are leaders in organized retail business, so their competitors would be the Future Group, Spencer, etc. But they are into their own niche space. They have multiple retail malls, especially in south part of India, and this is their basic USP that most of the DMart stores, in fact 99% of them, are located in a very small area, probably in 2 or 3 states, that is Maharashtra or Karnataka, etc. And they have just started or begun opening stores in north of India. There's one store that has opened in the western part of UP, or in close to, I mean, the UP Delhi border, and that's just about it. Otherwise most of their stores are in southern part of India. They are backed by the market guru Radhakrishnan Damani, who is a guru for many stock stalwarts of today. So he started with this business around 19 20 years ago with just 8 stores, and today they have, I think, around 180 or so stores currently running. So if you look at the financials of the company, it has been absolutely tremendous. The sales have grown by over 23%, and look at the base, 5,450 crores for one quarter of FY19. That is the second quarter of, sorry, yes, this is the September quarter of FY19, and it went up by 24% to 6,750 crores. The PAT has gone up by over 53%, and the company is absolutely zero debt. The best part of this company is that it is a large company that is making profits and everything, but they have no debt whatsoever. The return on equity is around 19%, and operating profit margin currently lies at around 9%. Yes, lower taxes has helped the numbers, and that's why the profitability looks extremely big. But even if you take out the tax part, they would have made a profit of around 44-45% profit growth in this year. So why the euphoria about DMart? First of all, moat and leadership. It is the number one retail company in India, and it provides organized retail business, and they have no debt whatsoever. They own their own stores, so they don't pay any rent on the stores. These stores are their own, and they have very good return ratios. The management is top class. There is no issue of management pedigree, integrity, anything. It would be regarded as one of the best managements in the Indian market, along with HDFC Bank, you would say. And the longevity of the business, retail is going to be the big thing over the next 2 3 decades. It's not going to go down, in fact it's going to go up, because the business went through a difficult time between 2010 and 15, and after that we have seen the consolidation in the retail space, and now there are only 2 3 big players, and one of the big players has a lot of debt on their books, although they have a lot of stores going around. That is a Future Group, but they have a lot of debt on their book, whereas DMart has consolidated over years, has expanded very gradually and meaningfully over the years, and have done really well so far with the numbers. So they are very investor friendly, and I believe over years it's going to get bigger in proportion. And remember, quality sells at a premium, and this is what is happening with DMart, currently selling at nearly 100 times earnings. If you look at the valuations of the company, currently the company is trading at around 97 98 times earnings on the current basis. The bear case PE of the company during that surgical strike time in June 2017 ended up to be at a PE of around June 2018, it ended out to be a PE of around 70. But you cannot expect the company to trade at a 70 PE with a 50% profit growth. So I believe that if you are lucky, you could get with the market fall this year, you could get the company at a PE of 80, and that would be a reasonable level to buy. So if I take the FY20 earnings to be around 22 rupees, a PE of 80 would take the stock to 1760. Currently the stock is trading around 1950. So you could see a 10, 11, 12% decline from current levels, which is quite decent considering the kind of numbers Dmart is coming up with. If you get this discount of 10-12% from the current levels, go ahead and buy the stock. There's strong support at 1650, 1680 levels, 1600, 1650 levels, but go ahead and buy the stock around 1750 if you get it. And we could see levels close to 2700 by the FY21 numbers, because I believe that they're going to come up with at least a 30 rupee EPS in FY21, sorry, and maybe they could come up with 32 rupees EPS that year. So if you look at the technicals of the company, there is strong support at 1700 levels, as I said, and the short-term support lies at 1900, but the biggest support lies around 1700. So any decline towards 1750, 1700 is a very good buying opportunity. It has already run up 45% in the last 1 year, even though the mid and small cap stocks did not run up that well, and even though the valuations were very ripe in Dmart, still it has gone up 45% in 1 year. That is absolutely tremendous for the shareholders. It can easily correct 10-12% from these levels, and that will be the time to buy. A major breakout is expected to be taking place above 2060 levels, so that is far away because the stock is reversing and it is around 1900, 1930 levels, and we could see a little downturn of around 10% or so in the coming weeks or months. I expect a major fall in the market in the Nifty stocks, and this stock runs when the main Nifty stock or the Nifty index runs. So once that starts falling, I think stocks like Titan, Dmart and Bajaj Finance will fall, and probably those days are coming nearer. And that's why I'm saying that it's better to invest in small caps at the moment, mid caps, rather than these large caps. The 200 DMA of the company is around 1615. So over 3-4 months, it will go up to around 1700 rupees level. So that would be the level to buy. If the stock goes to 1700, go ahead and buy Dmart. So what needs to be done? Well, you can buy close to 1900, start buying it around 1900 and keep on buying till the stock comes to around 1600, 1650. If you're lucky, you will have a very good average of around 1750, 1700 rupee average. Buy more when it declines, more buy less at higher levels. You'll have a very good average over the next 8 to 10 months. Don't expect returns in this stock in 2020. I do not see very big move in Dmart or these large caps, so-called very darling stocks that have run up over the last 1.5 years. They might not go up that well, so don't expect that. Probably you add on over the next 12-15 months and then see the magic later on. So look for massive falls to accumulate. This is a very good stock not to trade, so don't trade into it and invest into it for the next 5-7 years. This was my video on Dmart and when to buy it. Please like and subscribe my channel, hit the bell icon so that you can get my videos straight away when I post it. Thanks a lot for watching.